Hi everyone. This is in continuation of our commodity investing series. So this is the next video about gold and silver. So we have Arun with us. So hi Arun, how are you?
Yeah, I'm doing very well. Hope you're doing well as well.
Yeah,
Hello, everyone.
yeah. So ever since our last video, so many things have happened. Gold rallied, silver rallied, and then silver had a huge one-day crash, especially on an expiry day. And then what is going on in silver, gold, oil right now?
So if you see, essentially, if you see from yesterday's, price movement point of view, gold has actually closed the week on a highest ever. That is highest weekly close.
Hmm.
So the Friday close is the weekly close.
Hmm.
So 5,100, that's where gold has actually closed. So which is
Hmm.
very bullish actually, right?
Hmm.
So the gold is actually not going anywhere.
Hmm.
Silver also kind of rallied yesterday. So we say crash, but if you think about like how much it has actually increased, it's
Hmm.
probably a little bit of drop, right? It's really, I don't see it as a crash. Crash
Hmm.
is something like go down 50, 60% and then you stay there. We are coming back up. So it
Hmm.
is looking like it is consolidating here.
Hmm.
So yeah, we'll have to see how things unfold.
Got it. So one key question that is in everyone's mind. So why does the US economy matter so much for commodity prices of gold, silver, etc.?
First, you have to look at you have to separate out the silver and others separately. You
Hmm.
only have to first look at gold. Why is gold price affected, or what factors affect gold? That is, if you ask that question, then there
Hmm.
are three main things. So one is what is the reserve currency of the world? US dollars, right? So of course that's the reason why US economy matters. US debt position matters. How much debt it has
Hmm.
matters, right? And then gold is not only depend on US, but it also depends on how things are geopolitically, right? Okay, Russia, if it is doing a war, or what is US doing to Russia, and then other countries seeing that, and then how they react. So
Hmm.
all these kind of contributes to how gold goes, because gold is there is no counterparty risk for gold, right?
Hmm.
So it's a one entity, one store of value where there is no counterparty risk. So
Hmm.
that means it's also non-nation. So there is no nation holds, or like it's gold is not backed by any nation. Gold stands on its own, right?
Hmm.
But if you take US dollar or a US treasury, it is backed by US. So what US does impacts that. So when you have geopolitical issues, fear or anything, where they go to gold because it doesn't have counterparty risk. Everyone can access gold. At the same time, it's a store of value. It holds. So that is why.
Yeah, got it. So in terms of rate cuts, so US has done a couple of rate cuts, large numbers, and then there seems to be a pass. And in India, there were a couple of rate cuts again. Now, in the last meeting, they had a rate cut pass. So, how do interest rates generally affect gold and silver? This is again something
So
people who don't track
okay. So
commodities do not know much.
you have to India's rate cuts really don't matter for
Mm,
gold. So basically you need to understand um,
mm,
rates and the currencies, right? So
mm,
if Indian rates go up,
mm,
that means if you take a savings bank account,
mm,
if your rates is high, that means that if you save your money, you get more rate of return, right? In the
mm,
same way, you take a loan, the more the rate, the more higher the loan. So the rate affects your economy, and then
mm,
that internally affects the investment. So let's say if I get more return by investing in India for a return, then usually what happens is the Indian rupee is kind of stabilized or higher. So then the investment comes in, right? So your rate affects your currency. So in the same way, USD, US rates affects the US currency, like the essentially. So
mm,
there is a concept of real rates.
mm,
Real rates is essentially equal to nominal rates minus inflation. Okay.
mm,
So if you take the example of if you're getting, let's say, 3% in US, you get say 3%. rate,
mm,
nominal rate from a bank to store your money, right, or
mm,
save your money. If the US inflation is 2%,
mm,
so the real rate is actually 3 minus 2, 1%. Okay. So the question really is, am I happy with that 1% or am I happy with investing in gold? Gold, as I said, does
mm,
not give any return. There is only price increase in gold, right? So gold doesn't give any like kind of interest, but your other rates give. So it's a question of investment. Do I have to invest in gold with no returns, or do I invest in the actual rates? So that means if my bank is giving 3% rate, and if my inflation jumps to 5%, then my real return is minus 2%. So then what I would do when my real rates goes down, I won't invest there. I would rather invest in gold. So money, everything goes to gold. So
mm,
that is a basic fundamental. So in that sense, what happens when they drop the interest rate? So when
mm,
US drop the interest rate, your possibility of your real rates going negative increases, right? So
mm,
so that is the reason why the gold tends to go up. So but right now, the reason for one of the reasons, there are, I said, many contributing factors, right? So this is
mm.
one of the factors which could impact down the line, because now they are passing it. So as you know, Trump is getting his own person, Kevin Warsh, as the Fed chair. So Trump is pushing for lower rates, right? So maybe let's see, when he comes in, that will be a tailwind for gold again to go up.
Got it. So you predicted this long back, this commodity bull run. You told me in December 2024, and our first video about commodity investing was in December 2024, where you had predicted this and told me. So I did not follow you and invest much. So what about you? Did you manage to invest a lot in the commodities?
Yes, indeed. But I mean, see, we had the video in December 2024, so we talked
Mm.
about it then. But
Yeah, you
for me,
said
the bull
Hindalco,
market,
Hindustan Zinc,
yeah,
everything you told me.
yeah. So, but then
They
for
are
me,
up
the
3x.
gold prices started, the commodity bull market started in 2020 actually.
Okay.
Okay, so why? Because COVID happened. When COVID happened, all the countries, economy stopped. So to push
Hmm.
the economy, they have to print money, right? So they
Hmm.
print money and then they gave checks to people, right? So
Hmm.
everyone, whether it's US or any country, they
Hmm.
did that. Money
Hmm.
doesn't grow, right, on trees, right? So
Hmm.
they print their own money. So that means they are trying to inflate their own economy in, this thing, and they are
Hmm.
trying to debase the currency, right? So that was the fuel for all this one. So
Hmm.
in fact, all the so how did US raise all this money? They basically printed money and then essentially like bought their own 2 year treasury yield or 4 year
Hmm.
treasury. All this small duration treasury yield they bought. All those are now coming back. They are coming to their maturity date now. So
Hmm.
2025 had some maturity. 2026, this year, I think they have like 4 trillion of debt they have to roll over, meaning that they have to give back that money to their own system. How will they do it? They will again print the money, right? So US is in a debt spiral, right?
Hmm.
So essentially what this means is, unless they find a way to get out of this debt spiral, the situation is such a way that
Hmm.
the dollar will get debased.
Hmm.
So gold, how are you saying that gold? The gold you are measuring in a specific currency.
Hmm.
If the value of currency goes down, then how you measure it, the price will go up, right?
Hmm.
So that is why the US debt matters, and that's why like gold for me is like a theme, or it's a super bull. It's a market which goes on for me like for the next 10 years. So if you look back in 2000, what happened? 2000 gold was around like 400 or $500. Then it
Hmm.
went on a 10-year run. The top actually came in 2011.
Hmm.
So if you look at the gold chart, you'll
Yeah.
see that it started in 2000. 2004, they had the rate increase and rate decrease and all this other thing happened. Then you had the GFC issue that happened. But
Hmm.
in spite of all that, right from 2000 to 2011, the gold went on a move. So that was we call them, all the commodities also went up. And then
Hmm.
we topped at August 2011, even silver went to $50 then. And that's when your bus cycle started. So then we had a
Mm,
bust cycle of 2011 to 2018. We had the
mm,
commodity bust. And then again from 2018, 19, 20, you had the base from
mm.
2020 to next 10 years. I see that the commodities go on a run.
So when you say 10 years, you mean 2020 to 2030 or from now to 10
Yeah,
years?
yeah, usually a commodity market goes like for, if you talk about the super, like a cyclical market view, that is how it goes. Now, it will have its own way, like, for example, silver went from, I think,
Mm,
single digit to $50 or
mm,
$5 to $50 during that 10-year run. But along the way, it dropped three times
mm.
50%. So,
Okay.
for example, it will go from 10 to 20, and then
Mm,
it will drop to $15, like
mm,
50% of that, it drops, and then it will go
mm,
another 3x. So
mm,
that is how, like, so that is why when you say that silver crashed, yeah, in the context of it went up 2x and then it dropped 50x, like 50%, right? So in a market like this, you will see these kind of drops and then like it will go again. So right now, nothing has changed for the fundamentals of why gold and silver are going up has not changed. So that is why like there is no reason to sell, just hold. Yeah.
mm. Yeah, that is where my next question comes up. So you said typically a commodity bull run is for 10 years. So is gold still a safe investment today?
Yes, I mean, but I'm not asking you to, asking anyone, to go and buy now, right? So whatever we are talking is not an investment advice, viewers. So,
Mm,
but the way I see it is, yes, the gold has gone for a run. If you already have gold, you hold. There is no
mm,
reason to sell, right?
mm,
Silver as well, it went till 120. I did
mm,
talk about like, in the previous video, like
mm,
maybe take some profits there. So we have take profits and now it is like $70. I would say
mm.
there is nothing really has changed. So you could hold it. Yeah.
Got it. So again, the next question is related to silver only. So is silver rising because of factory demand or investor demand? And why is silver going up recently?
See, before I mean, the silver is essentially going up because of the geopolitical issues. Simple as that. Yes, you
Mm,
have, see, the fact the demand has always been there. So, silver market has always been suppressed. Like the US banks usually has had a track record of shorting the paper and then like suppressing
mm,
silver. Or, but then this time, the main reason that is happening is the geopolitical issue, which is basically uh, the governments across the world losing trust in US
mm,
and and then everyone for themselves, right? So see, this is a very very important point. So I would like to take a few moments to discuss this, right? So
mm,
in our lifetime, in my lifetime, we always had the concept of globalization, which means that everyone, you know, I can buy a car, but the car could have been made in anywhere. And then the car's door may be made in China, and then tire may be made in another country. So, but then I have this car which is going to be here, right? So globalization, that's your call, globalization. So US, what they did from a US point of view, they got rid of all their factories. So all their factories went to China, Vietnam, India. So essentially, they don't manufacture anything today, right? Or what they do, but they have their currency, which is their main investment or main thing. With that, they kind of push things everywhere. So essentially, the US dollar was removed from gold in terms of a coupling effect. So then they used the dollar as a weapon, as in like an economic
example.
weapon on
Mm,
other countries. So one thing, so when did the gold actually started moving, right? So it is
mm,
essentially, if you look back in time, it started during the time of Russia-Ukraine war. So
mm,
Russia invaded Ukraine in 2022, and right away, US imposed sanctions on Russia. But what exactly is a sanction? Russia, to do conduct trades with other countries, bought US dollars and US Treasury and all those, but these are not with them. These are sitting in some US bank, some German banks or somewhere, right? Now, what US did was they took Russia out of the SWIFT system, which is your system where you basically do your transfer of money, right? So it's like you are having a account, in your account you have like $1 million, but your phone is taken away or your login password is taken away. So that is essentially what happened to Russia. They all of a sudden lost their US dollar reserves. And then what happens? So Russia, natural resources, gold, they have lot and lot of gold. They are the second largest producer of the gold. So what they did, so okay, they use gold to do their transaction with other countries. They used oil, for example, India bought oil, China bought oil. They used oil and gold, right? Now, looking at this, what is the other countries thinking? India, China, Poland, all these other countries, developing countries, what they are thinking? Okay, maybe if we cross US, US will also do the same to us. So then, how do I save myself, right? So then you had the central banks across the world. Most of the countries started buying gold, and when
Mm,
everyone buys gold, price
mm,
goes high, right? So that is your basis of why gold in this run, why it has gone so high. The
mm,
US debt situation, other things are the factors which has been there for last 10 years, 15 years. But why now? It's mainly because US have a presidency now who's saying, I am for myself, I don't care about you, and I will use my dollar to play with you, right? And then what other countries are doing? They're saving themselves by buying gold. So this is your basis. Now with respect to silver and China, what they are doing, now that you have the critical minerals and other things. So China recently in the last December week, they said, okay, because we are putting tariff and other things for us, we won't, we will block all the silver from us because China is the biggest producer of silver from a refining point of view. So all the raw materials go to them and then they refine into
mm,
bars and then they send it everywhere, right? So China has that thing and then they put a notice in the month of December saying that we will only give critical minerals to licensed people, not for military purpose and only for commercial use. And then they put a lot of things. So this caused the silver to go up huge. The spike happened in the month of December to now. So over the last 2 months, it's essentially China is who is actually doing it, and China has been buying silver for themselves because they feel that first they have to take care of themselves, so they are stockpiling. In the other ways, like India is stockpiling, for example. So you have this thing of multiple people buying one product at the same time. So of course, the price goes high. So now, what has changed now? If you tell me, like anything has changed in the world view of US?
no.
No, right? So nothing has changed. Nothing has
Mm,
changed. So there
mm,
is, so maybe the buying intensity may go down,
mm,
but there is no selling intensity. The central banks are not going to sell all the gold they bought, right?
mm,
So that is why I'm saying I don't see a huge drop. Maybe
mm,
you have a plateau of some time. Maybe maybe there is like few months, nothing really happens. It goes sideways and people forget about it. And
mm,
then maybe there is another reason for us to move up or move down.
mm.
So
Got it.
that's the
So,
long-winded answer for what
yeah,
you asked.
got it. So last month
Yeah.
we witnessed a lot of euphoria in gold and silver prices. So people who missed the bus started to have FOMO and they started buying, and then within a week we had a huge crash. So silver, people kept saying that silver is the next gold I'm buying, and then silver started going up. Then they said that copper is the next silver, so we are buying copper, and it also started going up. So, so these commodities started moving faster than gold. So why does
Okay.
silver and copper
Yeah.
move faster than gold?
Basically, you need to understand that everything, the basis trade is gold. The
Mm,
moment that gold goes up and up
mm,
and up and up with regards to other commodities. So let's say silver did not move. Let's say copper did not move against gold.
mm,
So what happened in all those, like thousands of years ago? How do merchants trade, or if you go to a village, how do people trade?
mm,
They don't trade with money, right? So they trade with, okay, I will give you my rice, I will buy you milk from you. That is how
mm.
it is, right? So when you
Correct.
have, so you understand from a commodity point of view which commodity is valuable and the other is not valuable. But at some point of time, value of one commodity goes very high, then what I would do, I use this commodity and to try to buy my undervalued commodities. So that is the reason why there is a lag between gold and others. So first gold goes up, silver is like playing catch up, and then all of a sudden silver goes higher than gold. Why does it go? Because simply it's a question of liquidity, right? So
Mm.
silver is a small pond, gold
Yeah.
is the ocean. So
Mm.
when even like 5% of that money comes into silver, so in that small pond you don't have much, so then everything goes up. So this is why copper is a bit different in the sense that it's not a precious metal. So we don't
Mm.
consider copper as a precious metal, but still it's something which is like very important from an economy point of view. All the manufacturing,
Mm.
EVs or
Mm.
AI data centers,
Mm.
everything, power transmission, everything needs copper. So I would say copper is more structural commodity
Like. Mm.
than your gold and silver, which are precious metals.
Mm. So, in case if there is an economic slowdown, what happens to silver? Again, gold, as you said, it may remain steady. So, but is there anything drastic that will happen to silver in terms of economic
Um,
slowdown?
the way I see silver is like we are getting a newer, higher base of. My
Mm.
view is that we don't go all the way back to say, if you see in dollar terms, we started this run from $20. It went now till $120, and now it is sitting at 70 or $80, right? I don't
Mm.
see it going all the way to $20. So I
Mm.
see it is coming back to $50.
Mm.
Essentially, it is having a newer base, higher base,
Yeah.
right? Now it
Mm.
might stay there and then it might make a move. So
Ah.
when in doubt, always look at the gold to silver ratio. So usually gold to silver ratio like anywhere between 60 to 80. That is what we see it as the normal mean ratio. That is, take the gold value divided by silver value. What is that ratio, right? So that is usually 60, 80 is 60 to 80 is the nominal value. If you go 100, then that means that the gold is really highly valued. Then it means that buy silver there. If gold to silver ratio is 30, then start selling silver and take profit. So that is the basic view there.
Got it,
Yeah.
got it. So thanks for your detailed inputs on gold and silver. So we'll now move to crude oil. So there were some fun memes going around. So during the weekend, we may see a war between US and Iran. So go and fill petrol in all your vehicles, fill it fully because the price may shoot up in the next week if the war starts. So these kind of memes are trending right now because we are witnessing something that is beyond normal things. So we may even see a war starting between Iran and US anytime. So what is crude oil telling us about the US economy? So global economy. So whenever any global uncertainty happens, crude oil also creates a panic.
Oil is a bit different commodity because it's not really sorry, one second. ஒரு நிமிஷம் என்னோட ஹெட்செட் டிஸ்கனெக்ட் ஆயிடுச்சு. ஆயில் நம்ம புதுசா செக்மெண்ட் ஆரம்பிக்கலாமா, இஃப் யூ டோன்ட் மைண்ட்?
Sure, okay.
ஒரு நிமிஷம், நான் டிஸ்கனெக்ட் ஆயிடுச்சு. ஐ வில் ரீகனெக்ட்
Ah,
மை இது.